I've saved your eardrums for another week. So, hello, how is everyone? So, another live stream. Figure I'll probably save some guests I have for later on. I'm going to be going on vacation soon, and we'll try in July to have some people on so that I haven't before. So, just if you haven't listened before, so my videos are going to be more like topic driven. I wouldn't say educational. That's a little powerful, too far of a statement. But live streams, I was just more like journaling my thoughts about maybe current stock market events at the time, stuff like that. So I'd like to I can look back at in time, see what my thoughts were. Was I right? Shoot the crap. I'm not a grifter slayer. Like I might trash them. Okay, here we go. Shoot, that fell. Is that better? Okay, that must be better. So, can you hear Bacon? Let me know you hear that. Can you hear that? Let's see. Way better. Yeah. Okay. We will share. Okay. So I'm gonna keep it more topic driven on the live streams for now, or the current events, my thoughts. So let's see, how's everyone doing? We got the usual suspects here. Kale, Bacon. Okay, we're good. How's it feel? I can change the color too. I was joking with Kingdom that like if I like a stock, I can give it that. If I don't like it, if I don't want to say anything. So you might see that in the future. But I kind of like the blue light. If I have a question, I'll just it'll be flashing. So anyways, before we start, so I have my first ETF review is going to be tomorrow, as I said. It's going to be a live event, I guess, where I'll comment. Those are I did that one for a Peter Lynch, so it was kind of fun. And then I'll have a yield on cost Sunday come out around the time of Exit Liquidity podcast. So that should be a fun day on Sunday. I'm looking forward to it. We should have a very exciting guest. Not telling you. So anyways, we'll get into some of the topics. Unless anybody's got anything. Yeah. Be sure to like and subscribe. So as we're, unless you've lived under a rock, it's an interesting time to say the least to be an investor this year. Like literally it's like freaking not even 10 companies have just like dominated the US stock market. Like it's just insanity. Like yes, QQQ, but like even more than QQQ, like these specific companies have just crushed it this year. It's all, the big tech, the AI, Tesla's in there on the rebound. So it's such a super concentrated return in the market. And I thought this graph was interesting because a lot of the graphs I saw was like the QQQ to the SPY this year. So this is more specific. The return of, from the start of this month, the return of the rest of the S&P was nothing. Like, this is wild. Like it's amazing just to look at that. Like, so 7 companies in the S&P have done all the returns. The other 493, nothing. Like, you got to appreciate that. That's some super concentration. So I don't feel like I've missed out as a dividend investor. I have a S&P mutual fund in my retirement. I've got SCHD in my Roth. So I've got exposure to all of these. I don't feel like I can provide any value in looking at these companies. What do I know about AI? I'm an accountant. So I just use ETFs to give me exposure to these things that I don't really have any idea about. So, hey, I'm happy with it. I don't have to pretend I'm some guru at every type of investing. I stick mostly to industrial and retail stocks. if you haven't noticed already. Those are the ones I like to buy. And then I let ETFs take care of the rest for me, basically. So, and there's nothing wrong with that. That's how you probably should be. I'm going to stick to my core satellite. I'm not specifically like in this core satellite portfolio that I did a video on last week, but it's the only way I would recommend, unless you want to just go with like a broadly diversified ETF that you know about that covers the world, or I would recommend a core satellite allocation strategy. And that's about it. I'm not going to get into much more than that. We will do a portfolio and talk about our allocation episode of the exit liquidity when Jesse gets back and I get off vacation. So it'll be in July, because actually I think it's a good topic, and we've talked about it behind the scenes that I don't think enough of. It doesn't get talked about enough online. You get some YouTubers will just talk about ETFs, say buy this ETF, and then you got the ones that tell you to pick stocks. No one tells you like, how do you put it all together in a portfolio? And then you've got your retirement, your Roth, maybe you got a personal brokerage. Like, how do you put it all together? Jesse's kind of talked about that. I think it's a great idea. And I'm newer to this whole allocation. I've never systematically thought about it until recently. So it's kind of just the way things spun out, or the way how life worked out for me. So here's some other interesting charts, just looking at like just this year. By the way, I hate what they did with the charting Seeking Alpha. Makes my head. I hate this so much. Whoever did this, like friggin' clownery. But you could see QQQ obviously is the dominant player this year compared to like the Dow Jones, SPY. This is the US market, and this is the Russell 2000. So you can see where they all lay. So you can see SPY's outperformed the total US market, and you can see why, because the Russell hasn't kept up. So you take a little punishment on that. But I mean, you should be a very happy person if you bought basically anything but the Dow Jones. I think these are great returns if you have exposure to any of these. Dow Jones, I don't know, not my favorite. But so now I've tried to talk before about, you need to look where things are doing poorly. Like, you got to go to the dark places. Like, what is not doing well in the markets is what I would always say. So as soon as AI starts to run, then I just back away from tech. I'm not interested. So you saw in the first chart, the 493 S&P companies are zero, flatlined this year, no return. So I look at this and I'm like, all right, I've probably mentioned this before. I look at the sector ETFs from State Street. It's an easy way to just evaluate some of the sectors I'm interested in. There's 11 sectors. I'm not interested in all 11. I actually talk about this in my video tomorrow about DGRO, about the sectors just a bit. As a dividend investor, I think you should stay away from things that are heavily in the utilities and communication sectors. I think you should stay away from them. I don't think you're getting a good return on those. You should wait till retirement if you want to look at those. But okay, so this one, XLI, is industrial. This is a retail sector ETF, and this is healthcare. So you can see they're obviously not keeping up with the market. Healthcare, especially, we'll talk about, got beat up quite a bit recently. Industrials, you could see, we're having a hell of a time, and you just recently, this month, started to see them rebound. So I've been buying a lot of retail stocks in my portfolio that got beat up. I bought John Deere. I bought, what else? Tractor Supply. I bought a little bit. I was going to buy Cat, but it got lost on me. But there's some other industrials I have. So you can see, like, Memorial Day, it was pretty depressed for the year. I think it was negative. And then you've had a nice rebound the last month on industrials. You can go look at Caterpillar. It's had a great rebound. I wouldn't buy it right now, but so things are turning around. I mean, we got, half a year to go here. There's no reason. Don't get away from your investing strategy, dividend people. You bought dividend investments. Okay, they've had a rough 6 months. Like, for God's sakes, you outperformed last year. So you're still doing pretty good if you take last year and this year. Like, I'll show some Reddit posts. These people kill me. Retail. Everyone says you make fun of retail, and you say, "Oh, they're stupid," but then they do it themselves. You make the same mistakes that you make fun of people for. So So this is like where I'm focused. I'm looking right now. I'm still looking at retail, even though I didn't buy ASO. I'm still thinking about retail. I did buy Alta. I haven't sold it. I thought about it, but I'm not selling it. So I'm in Alta. I think Tractor Supply was a great opportunity down when it got around 200. I only bought a very tiny amount because I don't really need much more. But I think there's opportunities potentially. Healthcare is down for the year. I think military could have some opportunities right now. I'm probably going to buy some Northrop Grumman soon. I'm going to look at a few other ideas, but right now I might buy some Northrop Grumman. I think it's an interesting debate, L3 Harris versus Northrop. I don't think you're wrong. I'm already in Northrop. I think it's a better long-term hold of a company. I think they're in the exact right technology that you want to be in for military companies if you look at defense spending. But they have problems and risks. The bomber program is looks like it's unprofitable right now, but I think they'll fix that because they're the only people that can provide that technology and supply those planes. I'm not that concerned. So, okay, comments, and then we'll move on. Let's see. Dividends. Oh, yeah. I love Alta. Yeah, I'm kind of bummed. So, okay, I'll show you. I'm done with this one. When it first, I already had a cursory understanding of Alta. It's just something I've always kind of tracked. And so when it did this big drop, so I was kind of aware of, let me go to the summary. It'd be easier to show. So when it did that big drop, I didn't have to do a full analysis. I already kind of understood the business. I just had to verify a few things. I wasn't concerned. So I got in at, I think 410 or 411 as an initial position. And then I thought it might actually go down more when it bounced up like this so fast in the 420s. I was like, let's wait. And then, it kept going. So in this case, I'm a clown, sue me, but I think it is a $500 something stock. I don't know. I could buy more, fill out the position, but I don't love it at 450. It's kind of meh. And I have other ideas I might pursue right now, but I think I'll hold it for now. And then go lever it. No, just kidding. But this was a company like they hit their numbers, but then they did forward guidance trended or down projected. And I'm like, okay. I mean, for short term, I understand the concerns. I think they can rectify the shrinkage. I think things will get better for that company. And they have makeup's a powerful business. Women, I think I've seen surveys, they will buy makeup and they will stop spending money on other things before makeup. So I feel pretty good about this. I feel better about this than ASO. Now, I talked about ASO, my podcast, and then exit liquidity. Like I said, it's on my wait list now. So wait and see. So it's not a no. And I was looking at it when it was like 53, so it's kept dropping. So I feel good about that. So we'll see. Yeah, I think it might go down more. There's concerns with it. I'm not 100% on this. I feel better about Alta than this company. So next topic. So I don't know if people saw that this week you had, was it Tuesday or Wednesday? I'm so busy this week, where there was some news from United Health. All the health insurance companies went, poo-pooed. So they talk about here. So I'm like, well, what the hell happened? Like, I don't have time sometimes to keep up with stuff like this week. So, so this is kind of me figuring out what happened because I have Cigna. That's one of the few investments I've made this year. So we'll pull that up real quick. So basically, I read through some of the articles, and basically what happened is during COVID, a lot of voluntary elective surgeries got put on the back burner. So while these surgeries were put on the back burner, their profits went up because they're still collecting the premiums, but yet they're not paying out a bunch of money for elective surgeries. So their medical loss ratio, which is how much they actually have to pay out to their insured customers, went down. So they had record profits. And now they thought they might come back 2022, and they didn't come back quite then. But now United Health is like, okay, these people are now getting surgeries that are elective. So like I know 2 people that have gotten their hips done recently. So you could see these are elective surgeries that are coming back, and they cost a lot of money. Like I had my sinus fixed, I wouldn't have done that during COVID. I would have just put it off. I didn't have to do it. So then the market reacted, and all the insurers went down that I could see. So when I bought Cigna, my first buy was in the 250s. It was mostly a valuation play. I basically put their growth at like 2-3%. So I put it pretty bearish, which they had, I think it was like the last few years have been 3% growth. So I put it about that. I did a decent discount on it. And I think it's a stock, I think it's worth in the 300s. I don't want to get into specific prices. So it went to 250-ish. I bought it. I think it was around back here the first time. May. They ran up. I'm like, okay, so it ran up, and I'm like, I'll just wait. No biggie. I didn't buy all that I wanted. But I wasn't really strong in my beliefs on this. It was going to be a small position. Drop back down again. So I bought it again back here when it hit 250 again for a second time. I didn't buy it under 250. I don't think I even noticed this part. So here's the little blip from this week, and we're back up. So I probably will. I think I'll just wait. I don't think if it touches 250 or lower, then maybe I'll fill out probably the final buy if it does it again. Otherwise, I'm fine with it. So basically this is just, so my valuation is so freaking, I don't know. I don't think I have much risk with this, even if these concerns, their profits go down. Cigna is doing great. Their last 2 earnings, they beat earnings. So I'm not concerned about them in particular. My thesis is my thesis on Cigna is not based on outperforming the growth projections. My belief is in some other parts of the business, the buying back shares. I think they're going to do explosive dividend growth. So it's a different investment thesis than like an Alta or other things, or Northrop Grumman. They're all different theses. None of them are the same. And this is why I bash everything money, because they treat every investment the exact same. Everything's the same to them. And it's so wrong. It's so wrong. There's parts of every investment's a little bit of a different idea. You grasp a little, pieces from here and there. To treat every investment the same, I think, is silly. You should just buy ETFs if that's what you do. But, okay. Let's do some comments. Let's see. My girlfriend's cost base is 180. Finally borrow. Yeah. Wow. That's great. I talked about it in my Peter Lynch video, that I was aware of Alta. My wife brought me there in like 2015. If I'd paid more attention to it, it would have been an amazing investment. At the time, the numbers back then, it should have been a no-brainer. If I had ever looked at it, just, I was in dividend mode. It didn't pay a dividend, so it just didn't cross my mind. Counter thesis on shrinkage for Alta. If people have less money, they would more incentivize to steal. It's not just the store level, it's everywhere in the logistics chain. Yeah. And like I said before in a previous stream that I've never seen so many different CEOs at the same time talk about one subject like this. And then you see the news talking about it, like stores are closing in inner cities. They're locking. You'll see stores like Targets and Walmarts where they have whole aisles just locked behind glass. It's just crazy. I believe things will get better. I'm an optimist, so. Fourth wall through planning. Good evening, folks. Hello, Dom. More people said hi. Video idea. Your valuation is forgetting what you think. I talk about process sometimes, like Triton and other things. I don't want to be a guy that tells you this is an investment. I throw it in a calculator. I think it's worth this much. I don't always have specific prices. Like I said, I kind of am flexible in how I look at a company. Every company's different, and your thesis should change, which is something kind of I grasped from Peter Lynch's teachings, basically. And understanding of what are you buying and what do you expect to get out of it, specifically, not just make money. Like what do you expect out of the company? Maybe I guess I would rather review ETFs for now. I don't know. We had an idea, exit liquidity. We would all look at one stock together, and then all three of us would release a valuation video at the exact same time. So maybe we'll do that for fun at some point. It could be interesting. Better pay a dividend though. 14.60. Yeah, I saw Paul valued Meta today. I love it. Got to do those teens PE ratios even for tech companies. There you go. G. 8 pillars and you're set up for failure. I just keep saying, and I don't think you have any advantages to investing like everything money. Some of my investments are based on my personal experiences. I can do research on different topics because I have skill, my auditor investigative experience. That's what Triton kind of was me digging into the narrative of that they're going to stop ordering containers in a recession. And I'm like, I don't think that was true. And I don't think it was. So that was a 35% gain on that. But I don't see how you have a competitive advantage as an investor, a retail investor, just doing like a DCF or some sort of valuation model, and that's it. There has to be some blending of ideas. You've got to look in the future. You have to. Like, what do you like? I don't know how you look. You just go 5 years backwards and you just like do projections on growth, linear projections or something. It's just foolish. Again, like you just go buy an ETF. Like, I don't understand why people do this. I don't know. Or the copying. I don't know. Copying works when the whole market's going up, right? Everything's going up. You're unbeatable. But then you could have just bought QQQ and done better probably than copying people. So I don't see what the point is. So, okay. I was going to talk about, where am I? So AMD, I was going to talk about AI. I already talked about the AI boom. But so I'm not a tech channel. I'm not going to pretend I know tech. I build computers, but I'm not like a tech wizard. Like I know enough. For you young kids, my first computer was a DOS computer with a dot matrix printer. So all the way back. But basically at this point, I mean, you're talking like a 2-horse race. It's AMD versus NVIDIA. Intel's not even on the board yet, all right, for AI chips. So they're the two players in this. NVIDIA has a dominating position in this space. Right now, AMD's releasing their chips that they say are better. And so there's going to be a war between the two. Should you pick sides? I don't know. If you know something, I mean, both of those companies are so highly valued right now. I don't know. I don't think they're going to go down. I think this could go on for a year or two, this AI race. Don't just be like, look, .com went on for longer than you think. It wasn't just in one day that it all went bust. So don't assume when these things are going to go down. This could go on for a while. If you're shorting or doing puts, okay, it's overvalued. But now you have to put a time frame on when that overvaluation will get recognized by the markets and they'll start going down. Why would you do that? I don't think you should short or puts just based on valuation. You should only do it if you have some thesis about why the company is in trouble. Do they have accounting issues? Is there something? Do you think the CEO is hiding something? Is their business corrupt? I don't know. Are they hiding like that company that pushed their trucks down the hill? Like the fatal flaws of a company, like the Hindenburg reports, they have a thesis. You should have some sort of strong thesis like that to short a company. I think you're crazy just to do it based on valuation. But do what you want. I think you're nuts. So this part, so interestingly, AMD or Amazon is talking to AMD about potentially their new AI chips, which Lisa Su is saying are better than NVIDIA's. Do your own research if that's true. They're not out yet. So Amazon's considering using AMD's chip for the AWS instead of NVIDIA. So I'm like I said, don't assume the stocks are overvalued. AMD is an amazing company. It deserves a high valuation. Not every company gets the same valuation. AMD is a superior company to Intel in every way. So don't kid yourself about that. Now here's Intel. Intel promises AI data center chip in 2025. So NVIDIA is producing. AMD's got chips coming out this year. They say are better, but who knows? So who knows what generation chip AMD will be in by 2025. And here's Intel just delaying it. And this is the earliest. They could delay it again. They're still building fabs. They have these AI chips they haven't even started to build yet. They have all these things that have to happen for them to succeed. And the stock's gone up. Okay. I guess people think that it's all going to happen. If you believe all these things Intel's saying are going to happen, then sure, the stock could be a buy. You're taking a lot of risk, I think. I wouldn't buy it, not until they get close to building the fabs. And then I see the finish line on that because that's the rebound. I think that's the redemption for Intel is those fabs in the US, more chip demand in the world, onshoring, national security interests of the US. So this is good for us. So we'll see. Let's see who's got comments. Oh, 11 people. Yeah, shorting pre-owned valuation is scary because then, okay, first of all, you assume your valuation of the stock, okay, is right. And then you're assuming that the rest of the market recognizes the same idea you do. And then the stock's got to go down in the time frame you picked because you bought a put. I doubt you're nuts to buy. You're nuts to short these things. I wouldn't do it. Yeah, there you go. I mean, no doubt, like, when we get closer to those fabs being done and like they're done, they're about to start production. Yeah, it's probably going to be higher. Could be $50 at that point. But something could happen and those things maybe don't get built. And they still got to get that government funding. Who knows what happens with the next presidential election or Congress. I don't know. I'm not interested. P to believe. All right. So I have to dig on dividend people. Like the theme of retail, buy high, sell low. It's like the theme, short-sighted, right? Emotional. This is everything we say. And I ask every person that comes on the channel, I'll probably keep asking, why does retail underperform? Everyone kind of says about the same thing. We're emotional, short-term animals. And here you are. Here's another one. This guy, this post was from like 4 days ago on Reddit. The guy's like, oh, am I wrong? Should I sell SCHD? Look, stock went down. The stock went down like year to date. And it's like, oh yeah, there you go. Just wait till buy it last year it was high. Wait till it drops, then sell it. Now why don't you buy QQQ while you're at it? Don't even bother with Vanguard VU. Just go for the top. Like, it's freaking pure clownery. This is I said from before, this is going to be a great year to buy SCHD, I think. I still believe that. So you don't understand why you bought it. I could literally I'll go through it at some point with an ETF video. It's like you buy Schwab or SCHD for a very specific reason. And that thesis doesn't change because the stock went down 4%. There's a specific reason to buy this and put in your portfolio. If you don't understand that, then why did you, I don't know. You just bought it because it was cool, I guess. So assets under management for SCHD skyrocketed last year. And then they'll go down now. And then this guy, okay, this is just funny. It's not so bad. I hide the names. I'm not trying to embarrass individual people. It's not my intent. So what's your buy price for SCHD? I just think it's funny because it's like the point of holding what SCHD represents, a 3.7, 3.8% dividend yield that's growing at 15%. You hold that, do the calculation holding that for 30 years. That's why you buy that. And then he's like, what's your buy price? I'm like, buy price? You just dollar cost average into these damn things. You don't think about it. So now we're timing buy prices on ETFs. Is that what we're doing? We're gonna time the market, and we're gonna time our ETFs. Okay. I mean, spend your time trying to time individual stocks, but you're going to time buys on an ETF of 100 companies. So how do you know there's 100 companies? How would you possibly know if it's overvalued or undervalued? I think you're wasting your time. If you commit to buying an ETF, you just buy it on a regular basis. You don't even look at it. All right, who else? That one comment on Paul's video is so epic. The guy called him out so beautifully. He's like, when it was 100, you said buy it at 60. Then it got to 60, and you did a video to buy AMD at 30. He's like, what the hell? You cut it in half, then you cut it in half again. That's not how investing works. You're like, the valuation you put on it at 100 was still applicable at 60. Why did you run the numbers again? It's so stupid the way it's wrong. Paul he just will underperform forever. Yeah. So anyway, so I'm going to nerd out on this. And I've said this, I don't know where I said it. I've probably in Discord and on maybe some live streams before, but like, I think the game changer is going to be solid state, solid core batteries, if you will, that are going to be the game changer for EVs around the world. Lithium batteries. I know people are going to fight me. Fine. If you want to fight me on this, lithium batteries were never made to be put in cars like this. They were made to be put in tools, like my drill downstairs. These lithium batteries were never made to be scaled this large for this application. You have to have heating and cooling systems for these things to work. They will never be the solution. The lithium batteries that exist today are not the solution. They will not be what's in your cars, I don't think, in 10 years. Definitely not 20 years. And you'll say, well, they can improve them in this. They're fatally flawed batteries when it comes to using them for this purpose, to move around and have them in a car where you have huge temperature swings. That's my opinion. So I'm going to look back at this in a year or 5 years and see how it holds up. Whatever. Now, I'm not saying Toyota. I've said before, Toyota has a lot of patents, and they're working really hard on these solid state batteries. And I've said before, Toyota's not behind. When people, these Tesla shills are like, Toyota's behind because they're not producing EVs on the scale of like Tesla. And I'm like, I think their plan was to skip the first generation of EVs, whether it was intentional or not, or maybe that was not how it started, but it became that. I think they devoted their resources to the next battery generation, which they thought was the more permanent one. So they have patents. They've researched these batteries. They're not having to produce cars in the current lithium battery. They have some, but they're, I think they're just kind of prototypish. I've seen the one that they just released. So they're talking about releasing it a few years from now. So it did go up a little bit. I'm not interested in buying Toyota stock. Let's get that out of the way. Not interested. I'm not interested in international individual stocks. It's too big a company. I don't think this would move the needle so much. Like Toyota's not going to double, right? Like, I don't think I'm going to get a 2x return. I don't think I want to own the stock. So, but it's something for other, who is making solid state batteries. Where could this technology go in the future? Because if you're aware of it. So here's an article I got. The American Association of Mechanical Engineers. This talks about the limits of lithium batteries. So lithium batteries, limited drive range. We all know that. I think they get 200 miles. No, the normal EVs with lithium batteries, they have a short life. They just do. They don't have they don't take abuse well. If they get any sort of cracks or dings or dents, they're out of action. You expose them to salt water, they're out of action. They're pretty delicate, actually. And expensive materials. You have a lot of rare earth metals in them. So there's a lot of problems with them. Now, solid state batteries are not a new idea. They've been around for a long time, but they're trying to, there's a lot of research being put in them by a lot of different players. There's not one version of a solid state battery. There's different, variations on it. There's even one that uses sodium, which is kind of interesting. But In practical use, you would have a battery that doesn't have gel. If I'm saying this right, doesn't have the gel. So a lithium battery has gel between the layers. That's why they catch fire, which is one of the biggest problems with lithium batteries. They just burst into flames. You're not supposed to have your charger in your garage. I don't know if you realize that. You're supposed to have your charger outside your house because you're not supposed to park an EV in your garage because you might burn to death when you sleep. So these batteries, the potential of solid state batteries would be more rapid charging potentially than a lithium. Longer ranges, as you saw Toyota's saying, these batteries they're developing could start at 600 and get up to 900 miles of range. They're supposed to be more energy dense, which means they're lighter, which is a problem. Lithium batteries are very heavy. So there's a lot of problems with lithium batteries that solid state batteries can solve. The problem is that it doesn't exist necessarily yet. These solid state batteries for cars. It's all prototypes in theory. But we're going to get there, I think. So it's something as an investor, it's interesting. So we'll see. So something else to be a concern, like I said, lithium batteries are fragile, right? So this is stuff that's not been fully fleshed out. I've mentioned this before. Insurance companies are still trying to figure out how to insure these damn things. Because so if a Tesla, like a lithium battery car gets in an accident, how do you know that battery pack was not damaged? Are you really sure it's not damaged? Because if it is damaged, the thing could burst into flames, and they do. So insurance companies are in a weird place. When these things get hit, what do? Do you total it or do you fix it and say that it's fixed? So now the liability is on the insurance company that they've said the car is fixed and it's good to go. Or do they have to replace the battery pack as part of the fixing the car? The battery packs cost more than the damn cars in a lot of cases. So now it's like all these cases they have to just total these things. So a lot of this really has not been fleshed out fully, I don't think. And I know Tesla's talked about doing insurance themselves. I think that'd be a terrible idea to do that, but I wouldn't buy Tesla individually. So this is something people could look at. It's going to be a concern for the insurance industry. How do you insure these things, right? What if, can you insure them and someone that lives next to the ocean? Salt water is terrible for these things. So what, in the future, what if they're like, you can't have these things, you can't live within 100 miles of the ocean or 50 miles in the ocean to have an EV? Like these things could happen. We'll see. A lot of it's still, I think, undetermined. So more articles on solid state batteries, talking about they do exist. There's various versions of solid state batteries, like I said. So there was one company Bill Gates invested in, I think it was Quantum Scope or something, QuantumScape. I had a friend that actually bought that and he did really well on it during the clown market. So there's going to be companies working on these batteries. The problem is most of them are unprofitable. So you're basing a momentum trade or some breakthrough technology. So I don't know. You have to, how is this investable? You'd have to kind of look into it. So like a lot of the websites I'm seeing, solid state batteries will start popping in the market. We're 2025, 26, maybe the start of them, and then we'll see where it goes. I think it's going to take longer. So this might be something takes till 2030, might be a decade in development. But this is, I think, the real solution and this is the game over for gas cars. If you get something like 600 to 800 miles, charges in 20, 30 minutes fully, you get rid of, you've eliminated most of the risk of the fires. They maybe are not so fragile of a battery. And then the gel is not in there. So I think they handle temperature changes better than lithium batteries. So we will see. Some engineer is going to correct me. I am an accountant, so this is a hobby interest. Don't sue me, bro. But everyone wants to buy an EV car because they want to save the environment or some other weird reason. Yeah. The huge tax credits are part of it, I guess. I just don't want to go to the gas station when it's -5 in Wisconsin. But that's when you get the best, the most energy dense gas is when it's that cold. Some good facial reactions to the stream. Yeah, he is always here. All right. So last topic. I think this was the last topic I wanted to cover. Are we overvalued? Well, we can talk about, and I'll wrap up with some core satellite stuff. So here's the market, right? Going up, 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 up. Here it goes. It keeps going up. You got brief drops during the .com, and then here's the Great Recession. I think that's COVID. That you can barely even see it. That would have been the COVID, and then current time. So I don't need to be a technical analysis wizard to see this is an upward trend over time. So like I keep seeing all these articles about overvalue, US markets overvalued, is overvalued, blah, blah, blah. And it's like, okay, well here, hey, who do we have here? Look at this guy. So he wrote, here's an article written by the Capitalist Manifesto. I think it goes by a different name now, but he was saying the market was overvalued in 2015, among some of his other video or stupid articles. Let's go. 2015 is about there. Nope, wasn't overvalued. It kept going. Yep. Last I checked, that's not the top. So, and then we got, here's this one. Fears grow in the market over the bubble. 2015 again. Hell, I could just go US market overvalued. I remember people talked about it in like 2012 after the run after the Great Recession. Here we go. Stocks, US stocks overpriced by 50% 2012. Because I remember like after the run after the Great Recession that I got back from deployment, then around 2012, people were like, oh, it's gone up too much. It's too much. It's too expensive. I mean, here again. Okay, 2012. Stock market's overvalued 33, 44%, 34. Okay. Stock market's overvalued 2012. I mean, it's just a whole bunch of shit here. All right, let's go. 2012. Right here. Maybe about there. Okay. No, kept going up. I mean, I can find articles. I mean, pretty much almost every year I could think of, I could probably find some article on CNBC or ABC News talking about someone worried about overvaluation of stocks because they're a bubble. It's always a bubble overvalued. I just say, like, none of us are economists. Nobody knows the future. And none of these people know the future either because they've all been wrong. I don't know why you even worry about this. Because I've said, what's the worst thing you can do? The worst thing you can do is go all cash because you're terrified we're in a bubble or overvalued. It's the worst. I could show the chart again. How many times do I got to show the chart? Going all cash is the worst thing you can do. You could buy at the worst times every year in the market and you'd outperform cash. But then I see people in Discord terrified we're overvalued. I've seen tech run. Okay, I showed you the chart. You don't have to buy those 7 companies that went crazy or QQQ. There's other companies and investments that haven't gone that crazy this year. So there's always opportunity. But to go all cash is like, it's pure clownery. Like, nobody ever told you to do that. There's no research to back up what you're doing. Stay in the market. We can debate what you're going to buy, but to just like say we're overvalued is such a useless statement. It's a useless statement to say we're in a bubble overvalued. Like, you're not going to time it. You're just not. If you're you work 9 to 5, you're not going to see it coming. Don't worry about it. Look at this chart. Do you think your returns suffered here or anywhere? It would have suffered if you went cash and sold everything. You did just fine. Like, so whatever. Maybe we go into a giant crash next year and I look like a clown. So we will run it back at that point. I'll still have a job though. So sorry. I cannot be fired. Let's see. Do some. I already did that one. Sounds like the kind of guy that would short SPY. Like, I see like Paul, like he does like these historical metrics where he'll like take the market and he'll derive some formulaic percentage or numerical value to the market and compare it to like the market 20 years ago or the average of last 100 years. And I'm like, There's no point to that. It's useless. I don't even want to understand it. Like when I read those articles, I just like, I delete it because I'm like, there's no value to looking at that information other than you want to pretend you're really smart in investing. If you want to sound smart and intelligent investing with your friends, yeah, sure. Go memorize all those useless data points of the averages of the market for 30, 40, whatever years. It doesn't provide any value to you as an investor. This is useless. You can, I don't know, quote me on that. I don't give a shit. I can bench more than strong, man. I know I can. So I'm going to meet up with him, I think, this summer at some point. We'll see. So that's my spiel for the day. That's what I felt like talking about. I think, see, here's like the part of investing. A lot of other YouTubers just look for companies, do evaluations, and find a deficient evaluation. I like to look at bigger theses and work down. So they're working to me from like the bottom up. They're looking at companies, valuing them, and then purchasing them. I'm looking at bigger theses in the markets, and then how do I profit from them? Which, I mean, it's not every investment I do, but that's like why I have like garbage companies. It's a top-down thesis for garbage companies. You could say Tractor Supply kind of is a top-down thesis because it's based on demographic changes and the locations that they're in. I think their business in general just do well. It wasn't purely based on evaluation, but Cigna was a valuation play. Cigna was totally a valuation play. I just think it's very undervalued right now. Northrop Grumman is like a combination of valuation, and I think they're in the perfect position to really excel with government contracting based on the technology they have. And they do have moats. Not every government contractor has moats, but Northrop Grumman has moats. They're just a little beat up. So biotechs are easy. Yeah, show your receipts, buddy. Let's see how easy they are. Biotech. Dan is top down. I was wondering if someone would say that. Worst performing strategy. Worse than long tattoo chef. Yeah. So with that, what are we at? Oh, almost. That's okay. So if you want to watch my dividend growth review tomorrow, you can be bored to death and you can make fun of me. I'll be in the comments. Go for it. I don't care. It'd be fun. So that's my ideas for the week. So everyone, I get a 3-day weekend. I was going to say enjoy your long weekend. I mean, government workers get a 3-day weekend this weekend. So sorry you don't have one. I also just got a huge bonus in my contract and we got big raises when we renegotiated. So with that, I'm out. Bye.